Good morning, guys. Armand from Cool Trading Tools here. So we're gonna make this quick because I just recorded this without volume, and so I'm gonna re-record it right now. We've been watching this Nasdaq here the last coming days, right? We've been looking at this tightening range here to see are we gonna be entering some longer term consolidation. You have this high, low, high, low, high, low. Reset it yesterday, and now we're kind of opening in the middle of this range here. And what we're looking for is we're having a daily consolidation, and we're looking, does this lead to a weekly bull flag and a break higher? Or do we get some longer term weekly and maybe even monthly consolidation, which wouldn't be out of the ordinary? And you can use the same concept on the 5-minute charts intraday. For example, this would be our 5-minute chart, and we're looking to see what is the hourly chart going to be doing, and using 5-minute as our execution chart, and watching for like a flag on that to see which way it breaks. So unfortunately, overnight here we had an issue with Iranian missiles strike Strait of Hormuz. Iranian missiles strike the Strait of Hormuz, shipping push oil higher, and dent tech futures. So fortunately, what this does here is it's causing us to gap down, which Nasdaq's still in a good spot here. Our original plan yesterday, you can actually see here, we were talking about shorting last night SNDK and MU as our kind of watches here. Unfortunately, the SMH is now down 3% into the 50 SMA and lows, which I don't really feel necessarily like chasing that is the best way to go. I was looking at to continue with that short is SNDK and MU here as like our trades for the week today, to play that continuation of SMH lower. Now with this gap down, we're down about 30% on SNDK, probably similar on MU 26. But if we get to the 50 SMA, the idea was that these 50 SMAs would be a magnet. They haven't been tested in a while. But now the gap down ruins it a little bit. We're pushing a little higher now, which is good. So this is kind of our initial plan here now. I don't want to chase it, so most likely we'll be sitting on our hands for the first 15 to 20 minutes of the open and look to play a reversal of whichever directions it goes. So if it just pushes down at the open, we look for it to maybe undercut the 50 SMA and look to get long. Off of I'll go over the 3 steps we're looking for, but I'd also be willing to take those exact same 3 steps in the short direction if we push into these areas here, kind of, and reject this level of kind of like this consolidation. Maybe it tries to go green. Here's the green to red line, red to green line. If it fails here, so if we push into yesterday's areas and reject, or if we push lower and undercut the 50 SMA, those would be the patterns I'd be taking. And we take something like, for example, a 5-minute bear flag lower, where it kind of pushes lower, fails to break lower, and we get a hot long off that. I don't know if some news came out right now, but we'll have to check on that. Or an opening range break where it pushes initially on the first 2 5-minute candles, looks to move lower, and we get long off of like a strong intraday candle there. It's very similar, or a 5-minute trend. This is how we got into Soxel yesterday. We were kind of anticipating, this gapped up. We were anticipating an hourly lower high compared to this level here. So we let it push on the 5-minute chart here, right? And then, let me see if this makes this better. Not really. And then once it pushed higher here, we got short off the 5-minute trend change to the downside. So it pushes. We're expecting on the longer time frames for it to fail. So as it fails here, we get short here. We cover kind of into this 196 area here. But that would be the 3 ways: failed bear flag, failed opening range break low, or a 5-minute trend change. And like I said, we're looking ideally, unless things change going into the open, we still have an hour and a half. We look to reverse the initial move. And like I said, we're doing this because what we do is we take the pattern, and because we're playing stocks, we'll be playing SNXX, for example, which is, this is moving $9 ATR, which is 50% of its price each day, which is, awesome volatility. Same with MUZ. This just came out. It's a 2x ETF for MU. It's 21.6, 7 million, liquid enough to day trade. And so what that does is that allows you to take trades on these, right? And what happens here, and this is the core of our strategy, is I care a lot more about being in names that are volatile than being directional. I do try to align my direction with the right side, obviously, but volatility I think is much more important because you can take your shots, and if you cover some of the initial movement based off of like the obvious intraday action, you can cover some, and because you're playing names with such volatility, there's enough room to capture a good profit on the day. And even if you're not a great trader, if you're trading names that are providing great volatility, you'll usually break even during your learning curve, let alone if you're good at also aligning directionally with all the other things that goes into that. So look to reverse initial moves on MU and SNDK. That's kind of the plan for those right now via playing SNXX or MUZ. The other thing I was looking at is this SpaceX here, right? And let me see, we're at 6 minutes. So SpaceX here. This had what had is a NASDAQ inclusion. It's getting added to the NASDAQ here, which is a little unusual. But so this is my theory on this. I don't want to really touch it until it leaves this box here. I am leaning short for one big reason on this, or two big reasons. The big reason is there's probably some anticipation on the NASDAQ entry here. So there's people that were buying in anticipation for this. And right now we're having a negative reaction with the market. Not gapping as low as the market, so that may be bullish, whatever you consider it. Doesn't really matter. We'll just wait for the signal to see what it is. But this stock is still, from every metric, much overvalued, right? So what does that mean? That this NASDAQ, it's not going to move higher really necessarily off valuation. It's going to move higher off of hype and news flow, things like that are getting it. Well, right now, this was probably the big news flow that was going to maybe give it another push higher that if anybody was trying to get long on it was waiting for. And now it's not reacting that way. So I think it's a possibility here we can break this kind of 155 area here. Look for a short here. People that were hoping that the NASDAQ inclusion would be a propel for another bounce on this are going to probably bail on it. And then we can look for a break on 150. Same concept, right? We cover some into the volatility and see if we can get in a trend. So actually also on Soxel, right? We covered some on the initial move here, lower. We entered on this break here on the 5-minute trend change, covered some, re-added back in the 5-minute trend against the VWAP, lowered or stopped to break even on the remaining shares, and we're able to catch in. That's kind of how we, maneuver in and out of these trades. Same thing here. Do we look to anticipate, or we look how we get into the 155 break, cover some into this 150 area. Hopefully, if it looks like it's going to break this 150 area, it gives us an opportunity to add additional shares into that short. My big concern on this is not really directional because, like I said, I think that'll show itself obviously. But the bigger concern is, does volatility wear out? The volatility has decreased a little bit. Like on this day here, we got 7 points of range. That's my bigger concern because what happens then is when you're wrong direction, that's okay. But what happens when the volatility dies out is it just gets a little bit more choppy and you end up kind of having that death by 1,000 paper cuts because it doesn't necessarily look bullish. So you don't feel like you have to give up on the idea, but it just does like a little breakdown, stops you out. A little breakdown stops you out. Versus if it just breaks down, stops you out, and goes way higher, you can be like, okay, I'm wrong. And that, it's like a one-loss thing. Versus if it's just a lack of volatility, it ends up being choppiness. And that can be a little bit more, for my style, more damaging than just being wrong on the trade. So I'm more worried about a lack of volatility than directional. But I think those are the ideas. We look to reverse MU and SNDK, either direction. I'm open long or short. SpaceX, I think if this shows some signs of weakness, that would be enough for people to bail because there are people anticipating this NASDAQ inclusion. I think that's the idea we would go with that. So awesome. You guys have a good trading day, and see you tomorrow.